YouTube. Let's talk about the stock price predictions for SoFi. Now, thank you guys for tuning in. Please hit that thumbs up as we continue to grow the channel. I greatly would appreciate it. Now, as I stated in the last video, the background looks a little bit different. My wife and I have been on vacation for the past couple of days, which is why I've been late getting videos out. Not only that, we've been having technical difficulties even getting a video uploaded. So from that perspective, I apologize, but we'll be back in the regular lab soon. Now let's talk about SoFi. SoFi over the past month is up over 34%. Okay, year to date, SoFi is up over 40%, and over the last week, SoFi has been kind of consolidating a little bit. We've seen some bumps here and there, but things are looking good for SoFi. Now, there was some information that came out this week that we're going to talk about before we actually get into the stock price predictions. And so let's go ahead and go into this. Now, before I start to speak about what's in this particular bit of information, okay, a lot of good has been going on. We know about the interest rates, and now there are talks about the student loan repayments are going to actually happen. I would say, I don't know if that's going to be sometime early next year, but that's another reason why SoFi stock is bumped up. Okay, now what I feel about that, outside of our content here, doesn't really matter, so I'm just keeping that neutral. Now, here's what the information is. So it says this: SoFi is overhauling its robo-advisor offering by adding new investment options in its first ever fee, right? So now we're starting to get more into the profitability side of SoFi, in conjunction with gonna retain those profits from student loans, and then they've got their other loan programs. They've got a lot going on. It says the company's revamped robo-advisor charges clients an annual 0.25% fee based on assets. Now, it's the first time the San Francisco-based company has charged clients for using its robo-advisor. Now, the annual fee, which doesn't include expenses charged by mutual funds and ETFs, is in line with what other robo-advisors charge, and well below what traditional human financial advisors charge. So in that perspective, right, you don't have to necessarily have a human advisor. That's going to save you money, but then you get to still charge that 0.25% fee. Now, when you look at it from a balance sheet perspective, guess what? That positive is going to outweigh the negative. Now, it says, quote, the goal behind the new charge was introducing a simple and transparent fee that is low and that matches not just what we launched today, but what we will launch in the future, says Brian Walsh, head of advice and planning at SoFi. Now, David Goldstone, manager of investment research at Condor Capital Wealth Management, says it's not surprising that the company began charging for its automated investing service. Other robo-advisors have followed a similar pattern of prioritizing growth first and then profitability. So this person says they've been expecting them to eventually charge a fee for this product, Goldstone says. Now, adding alts, SoFi has also expanded the portfolio themes customers can choose from, adding a new alternative investing portfolio option, which includes real estate and multi-strategy funds. Now, SoFi's other portfolio themes are, quote, classic, which consists of equities and fixed income, and socially responsible. Now, customers can get started investing with as little as $50, according to the company's website. Okay, so this is a little bit about what's going on, and of course, it goes into more. Okay, which we'll briefly talk about here. So it says SoFi's robo-advisor has been steadily growing. Walsh says assets recently topped $1.3 billion, up from $800 roughly a year ago. Now, the robo serves more than 175,000 customers. It also fits within SoFi's spectrum of personal finance offerings, which includes student refinancing, banking, mortgages, and credit cards. Walsh says that robo-advisor is picking up first-time SoFi customers as well as customers who have used SoFi's other services. Okay, so very, very good news there. Now, let's talk about the stock price predictions for this week. Now, the big thing for this week, and of course, there's going to be some economic data that comes out this week, but the big thing this week is going to be Nvidia. Now, I know a lot of you probably are thinking, what does that have to do with SoFi? But if you guys have been paying attention and you look at how heavily weighted Nvidia is on the overall markets, and they're going to be having earnings this week as they've been kind of carrying the entire market this year. The entire market is going to be on the lookout. Okay, now, yes, you do have Apple and Microsoft that can kind of balance things out in a way, but overall, I think the overall market is going to go where Nvidia is going to go, unless something individual comes out about SoFi that the markets want to hear. Okay, so from my perspective, here's what I'm looking at for SoFi. So for SoFi this particular week, and we'll talk about some other things in just a second. Okay, but for SoFi this week, I'm looking at a potential breakthrough of $14.44, which you can see on the screen with the first blue line at the top. So that's a level of resistance we would need to clear in order to get to the next level, which would eventually be $14.75, then $15. So overall, if things come out great with Nvidia, maybe we can move on to higher heights. Now, if things do not go so great, there's a potential of coming back to retest $12.31. But I will say this. It's looking like inflation is starting to raise again. But I'll say this. The Fed does not really seem too concerned with that. And either way it goes, they're at least making it seem like there won't be any hikes, meaning we're going to continue to work on cutting, but we're in a bit of a pickle there. But I would say this, because of the newly elected president, and if you don't know anything about him and how he feels about interest rates, he wants money to be as cheap as possible. He wants the economy to obviously get better. And so from that perspective, I think rates will continue to come down, okay? Because I remember how he was the last time he was in office. He was on Jerome Powell's butt, I would say. So let's look up one more thing, guys. And I apologize, I can't share everything, but there's one more thing I wanted to kind of look at. Now, as far as economic data this week, we've got initial jobless claims, which is obviously going to be important. We have the S&P numbers that are coming out. So you got the S&P PMI, you got manufacturing, and then a big one we're going to have is existing home sales, and then consumer sentiment, which are going to be very important. Now, aside of that, we will have some of the Feds speaking this week. So we'll see if things are going to be aligned with what Jerome Powell said last week. So I'm looking to see if there's going to be some inconsistency there. Now, next week is going to be a big one, as we're going to be getting the PCE number. So we got some time before then. But overall, guys, I think that there's going to be some pretty over-exaggerated moves for SoFi this week due to everything that's going to be going on. So we'll see what happens. I'm out, guys. Peace.